What is going on, traders? Welcome back to the Traveling Trader. So much to get into in this episode. Obviously, we're going to be talking about the best stocks to buy right now. I'm going to get into the best stocks based on the current market conditions, the current market landscape, what the Fed is doing, and obviously the stock's price relative to where it should be trading according to our analysis based on both fundamentals and technicals. Today, hospitality stocks are ripping, Chinese stocks are ripping. Really, the whole market is melting up in anticipation of this Fed meeting or this Fed symposium that is due on Thursday and Friday of this week. I did a whole video on what to expect. It wasn't the live stream yesterday, but it was the video from Sunday. So go back and watch that if you want a summary. Also, we did bring back the live streams back by popular demand, especially now that I'm back in the US. I was traveling for about 2 months, but now I'm back at home base with a strong internet connection, so I get to do these live streams for you. I announced the live streams on the Discord as well as on the YouTube post, so make sure you look out for that if you want to tune in. The next one will be August 25th, Wednesday in the morning, usually around market open. So look out for that, and let's get right into it. So first, we'll talk about a brief market update, and then, of course, I'll get into the stocks that we are looking at, as well as some of the current plays that we have open from our private trading group. You'll definitely want to check these out. So, as I said, the Fed Symposium is due out this week, August 26th and 27th. I believe this is going to be a virtual event, even though initially it was going to be an in-person event. Now, when this symposium was announced months ago, the expectation was that the Fed is going to now start talking about tapering in the summer. However, the Delta variant is raging. COVID cases are rising. And so it is expected that in light of that, the Fed chair, Jerome Powell, is actually going to be just as vague as he was about tapering, and they will not provide a tapering commitment date during the symposium. They'll still say, hey, we'll explore this towards the end of the year, November, December, etc., but they will not commit to tapering during this event. Obviously, we are not fortune tellers. I'm not Nostradamus. I can't tell you exactly what will happen. These are just what analysts' expectations are. Now, if Jerome Powell somehow shows up drunk to the meeting and says, hey, look, we're going to be tapering starting this week, then yes, you can expect the market to take a hit. There will be a shock in the market if the Fed announces tapering or starts tapering, right? And I've gone over in that video that I talked about on Sunday, I've gone over historically how the market has performed when the Fed has announced a tapering policy. And initially, the market does see a shell shock. However, the market ends up working through it. And the year that they announced this tapering in 2013, there was an initial 6% shock to the market where the market drew down by 6%, but it ended the year 30% higher. And since 2008, this has pretty much been the trend when tapering occurs. Now, regardless of that, I do see some choppiness heading into the fall in the market. Now, if you're a fan of this channel, you know I've been talking about that for a while. August and September are traditionally not really great months for the market. It doesn't mean the market will crash, but we could see some choppiness leading into the fall. However, as you know, I am not a fan of divesting from the market. I mean, look at the S&P 500 here. We just hit an all-time high. We hit an all-time high in the NASDAQ. The NASDAQ hit 15K today. That is unreal. The reason I bring that up is by the time we do see a 5% or 10% correction in the market, the point at which it drops could be higher than the point that you were originally going to invest, but you withheld from investing because you thought the market would tank. There are mitigation strategies, especially if you know how to use options. There are mitigation strategies that one can use in order to stay long in the market, right? Keep the high conviction stocks that you have, keep the portfolio that you have, especially if you want to avoid any sort of additional tax burden, right? Because if you sell short-term assets, you're essentially taxed double. So you keep your holdings and mitigate your portfolio by using option strategies such as buying covered calls, selling cash secured puts, buying protective puts, etc. Now, one strategy that I like to employ during times of uncertainty, and I might make a whole video on this if you guys request it, put it in the comment section below and let me know. But one strategy that I like to employ is being long on the market, right? So either investing in the SPY or the Qs, which are basically the ETFs that track the indices, either the NASDAQ or the S&P, and then sell puts on the VIX, which is the volatility index, especially when the VIX is at a recent low like it is here. The volatility index is basically just the index that tracks the expected volatility in the market. Usually when the market is ripping higher, volatility goes down. When the market tanks, volatility goes up because moves down are usually more violent than moves up. Yes, you could get a situation in which volatility and the markets go up at the same time, but usually it's an inverse relationship. So if you are long on the market and you sell puts on on the VIX, then if the market draws down and essentially the VIX, the volatility index, spikes, you are going to make money based on the puts that you sold on the VIX, even if you lose money on your long positions. But that way you maintain your long positions, you don't prematurely sell them. You can remain long in the market while maintaining is essentially a long position on the VIX through the selling of puts. I know that's complicated. I don't mean to complicate you. So if this is something that sounds like Spanish to you, then you certainly don't have to do it. Paper trade options, read about them if you want. I don't mean to intimidate you. I just want to give you a glimpse of what is possible. Again, if you want a dedicated video on this strategy, let me know in the comment section below. I'll be happy to do it for you guys. If you guys want to learn how to trade options, there is a beautiful course that I spent 100 hours putting together. That link is also in the description. And we trade options in our private trading group as well. I've taught thousands of people how to trade options. Let's get back to the video. So that is my take on the market, right? Like I don't fully divest from the market. There's no real way to guess when a correction is coming. I know it is coming. Everybody knows it is coming. The S&P and the Dow have not corrected yet. Since the low of the pandemic, the only index that has corrected is the NASDAQ, and the NASDAQ just did an all-time high today. So I'm a huge fan of staying invested in the market. And if we do see these indices drop to these major moving averages, then loading up heavier. If you look at my portfolio, if you look at my official portfolio, the biggest holdings I have are actually index funds. The Qs make up almost 10% of my portfolio. The S&P makes up almost 9% of my portfolio. These are my two biggest holdings here, aside from obviously the mega cap tech stocks like Apple, Amazon, Microsoft. But those are my two biggest holdings. People think that these things are unsexy, and so they overload on meme stocks or zombie stocks. But if you have conviction in the US stock market, these index funds will help you go to bed at night. Doesn't mean you can't trade risky shit. I love doing it all the time. I trade binary events like earnings and FDA approvals and whatnot. But position sizing is more important in that regard. And maybe for those of you that drink and trade, maybe you should actually rethink the strategy. 6 in 10 Gen Z investors admit to trading while drunk. What the hell? The market opens at 6:30 West Coast time. I hope none of these people are on the West Coast because that is too early to goddamn drink. Maybe if you're on the East Coast. All right, so what stocks am I looking at now? If you watch my last video from Sunday where I was talking about stocks to buy ahead of the Fed meeting, I mentioned SOXL, which is the semiconductor leveraged ETF. That thing is up 10% since I did that video. Obviously, as I said, the hospitality stocks are ripping. You could see Jets here making a 3 green soldier pattern. This is a very bullish pattern here. LVS, which is Las Vegas Sands, seems to have found a bottom. It hit near the bottom of the COVID pandemic, March 2020. As I said in that video, these hospitality stocks, if you're willing to hold for the very long term, we're talking about years here, these are obvious value plays. All right, so in the internet security stocks, I like Okta. We bought into Okta yesterday. It is up 5% today. We sent that alert in the trade alerts, but Okta was at the 300-day moving average, a point at which it normally bounces off of. I really like Okta here. And also in the internet security realm is FireEye, also at the 300-day moving average, up also 5% today. So if you're looking for cybersecurity exposure, look at Okta, and FireEye is being undervalued plays here. And it's important that I know we are talking about long term. Do not try to swing trade from a video. You could be watching this video a month from now. It doesn't mean that these positions are perpetually good for swing trades, okay? But the point at which these are here, in my view, these stocks are good for the long term. Focus on building a quality long-term portfolio, and then you can sprinkle in some risk according to your risk tolerance around it. All right, Nintendo is another stock here. Nintendo was down 30%. Looks like it found some support back at the August 2020 levels. Now, Nintendo usually sees a nice holiday cycle here, right? And any lull in Nintendo, especially during the summer, before any sort of new consoles are announced, before the holiday shopping season goes on. Oh, wow. Actually, let me change my background. I just realized that I'm not showing you the chart. There it is. So Nintendo here at $60, it was trading at almost $83 just a couple of months ago. So I do like Nintendo here. It is an OTC stock, so keep that in mind. But keep this one on your long-term radar if you are looking for a solid retail play for the holiday season. I'm also looking at Fiverr here. I do have an options play on Fiverr that is set to expire in a month, but Fiverr is sitting as support going all the way back to November 2020. It surprisingly reported positive earnings. We see the positive MACD here. It was oversold on the RSI, but especially if there are going to be more restrictions due to the variants of COVID, Fiverr could be seen as a hybrid stay-at-home play, and I like it here as support. The good thing about buying at support is you could set a stop limit very close to your entry, and it will be a rather low-risk trade. Amazon is a steal at a 16% discount. It is up almost 5% since that video. We do have a call spread on Amazon as well. Another stock that I'm looking at major support is Intel, ticker symbol INTC. One of the reasons that I love Intel, as I said before, it is an American semiconductor company. It is seen as a legacy brand. It is the hallmark of American semiconductors. I mean, AMD is technically an American company as well, but it does not have the history that Intel does, even though AMD has had more success as of late. But I do believe that in the future, Intel will be a huge player in alleviating the chip shortage. And the US government, I think, does have a soft spot for Intel. And you could see here that just yesterday, it was announced that Intel won a Defense Department contract for advanced chips. And they will also likely benefit from any semiconductor component that is in the future infrastructure bill. DraftKings is up 20% since we bought it a couple of months ago. We bought it sitting here at the 300-day moving average, up 20%. During that time, it has already acquired GNOG, which is Golden Nugget Online Gaming. With baseball season already here, the NFL season coming up, and the NHL and NBA starting up again in a couple of months, I do think that DraftKings is poised for a run back to the $60 range and above. It definitely was more lucrative when it was sitting here at the 300 moving average when nobody wanted it, but I do think there is still some room to run in the long term. And now on to the Chinese stocks. If you do have room for risk in your portfolio, I do have a very small section of my portfolio dedicated to emerging markets and Chinese stocks. I know this is a point of contention for a lot of people. Some people stay away completely from them. However, I do think that there is, in my view, there's room, at least in my portfolio, for emerging market and Chinese stocks. I do think the China FUD thing arises every few years as a point of negotiation between China and the US, the two greatest world superpowers at the moment. This reminds me a lot of what happened in the Chinese market in 2015, but KWEB and FXI, which are two ETFs that are based in China, you don't even have to pick individual Chinese stocks. Now, again, if you are completely against the idea of investing in China, of course, you can ignore this. Not everybody has to have the same perspective, and that's okay. I personally would not put more than 5% of my portfolio in an emerging market and China market fund. Do what's good according to your risk tolerance. Another American semiconductor stock that I believe is undervalued is Micron. It's at the bottom of this channel, sitting at the 300-day moving average. As a matter of fact, on yesterday's live stream, I bought a leap, which is just a long-dated call option on Micron that is up 10% today. And I did that live on the video yesterday. Go back and watch it. That was the only trade I executed live on that live stream. But that trade is up 10% today. Folks that were short-term took profits. I am more bullish on Micron for the long term. Again, that is a very long-dated call option, so we have a long time to go, but you can also just buy the shares here. And if you're a fan of this channel and or you were on the Discord, you know that we alerted Airbnb when it was sitting, again, like the lonely model at the party. It was sitting at major support. We alerted this back in May 27th when it was sitting here. It had a monster day, one of the biggest candles that it's ever had. Up 10% today. We're up almost 19% total on this position. I do think there's more room to run for Airbnb as it is part of the recovery story, but I would wait for a pullback here before jumping back in. I do think the market might be prematurely pricing in a recovery. We might have another wave of drawdowns before a full recovery next year. Really depends on what's going on with the variant, depends on what's going on with the booster shots, etc. Now, I did, as a sort of a hedge, I also bought a bullish position on Moderna because I'm expecting the boosters to be approved by the FDA, and I'm also expecting Moderna to be approved by the FDA at some point soon. And so I do think that Moderna will see another run up as well. It is currently sitting at the 21 EMA. This one is more risky just because of its high price point. You could set a stop limit below the 21 EMA to protect your position here. But in my view, you can't just have 100% bullish positions in reopening plays here. You do have to factor in some sort of risk that the reopening will be delayed. The full reopening will be delayed until spring or summer of 2022. Anyway, traders, that is it for this video. Watch the Fed symposium on Thursday and Friday. You want to hear for tapering talk. You want to see whether the Fed continues to sing the same vague tune about tapering that, hey, yeah, we'll look at that towards the end of the year. Don't worry about that now. Or whether they will be more firm about tapering talks. If they are more firm about tapering, then expect the market to be shocked initially. If they are vague about tapering, or even better, if they postpone tapering till 2022, then expect the market to continue to melt up slowly, but proceed with caution. As I said, you want to pick your spots here. You want to pick undervalued plays. You don't want to blow your whole load on one price point at an all-time high, whether you're talking about Apple or even the NASDAQ or the S&P. These are at all-time highs right now. You want to pick your spots and look for undervalued plays that you can leverage. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you are playing. Let me know if you want me to make a dedicated video on that hedging strategy, getting into the index funds and selling puts on the VIX at the same time. I will do a dedicated video for you guys. Watch out for the live streams. Again, the next one will be Wednesday, August 25th around market open. I will send that link out both on YouTube so that all the subscribers will get it, as well as on the Discord and on the Patreon. If you want to learn how to trade options, check out the options course below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.